Hello and welcome to WION World is One. I'm Kanishka Sarkar. Now, a temporary dip in oil prices is masking a terrifying physical reality. ExxonMobil warns that global oil stocks will hit dangerously low levels within weeks, while economists project an imminent inflation spike. From fuel pumps to dinner tables, in this conversation with Dr. Jayant Menon, a visiting senior fellow at the Institute of Southeast Asian Studies, we will decode how this energy shock hits your wallet. Hi, sir. Thank you for joining me. Now, Dr. Menon, ExxonMobil rarely issues any public alerts, but it has warned that global oil inventories could hit dangerously low levels within weeks, that is. Now, if supply isn't keeping pace with demand, how violently do you think will retail prices react when the safety cushion is entirely gone?
Right. Now, we've already seen prices shoot up, and they've moved around very high levels, dipping a little bit whenever there's a bit of good news, and then very quickly returning to high levels. I think the big concern now is that on top of that is the quantity crunch, right? When you have supplies starting to, which are already rationed, starting to run out, then you're going to have massive price increases. And this will reverberate throughout the economy, and we can see potentially runaway inflation because inflationary expectations will start rising, and this becomes a self-fulfilling vicious circle. They expect higher inflation, and so they start behaving in that way, and they get higher inflation, and so on and so forth. So the quantity crunch is going to magnify what we have already been witnessing, and the warning from Exxon should be heeded very, very carefully.
Right. Dr. Menon, Brent crude, like you were talking about, it has already dropped nearly 10% this week in market sentiment. Yet global shipping freight indexes, they have surged to their highest since late 2023. Now, as a consumer, should one ignore the market dip and prepare for a big transport cost hike, which has already sort of started rolling in with petrol and diesel prices rising?
Well, I think we shouldn't focus too much on the sort of variations on a day-to-day or week-to-week basis. These are in response to expectations about when this crisis will end. Of course, everyone is trying to second guess the outcome, and people are placing bets on both sides. And so you'll see these reflected in these highly volatile prices, and there is a divergence between the two, between crude oil, which is traded internationally and has a world price, and then you've got other types of transport costs that are affected by a lot of factors, including local and regional factors. So the bottom line, though, is that until there is a clear resolution to this conflict and certainty about the opening of the Strait of Hormuz in a as believable a way as possible, that it's not just a temporary pause, then these sorts of variations won't matter. The trend will have to start changing, right? It'll have to start coming down, and any kind of variation around that trend is noise. We shouldn't worry too much about that. We need a resolution to the crisis.
Right. Dr. Menon, you were highlighting how regional and local issues also play a part in all of these prices. So I want to talk specifically about Asia first. Now, Japan's oil imports have collapsed by 66%. That's the lowest since 1967. While South Korea, that's aggressively hoarding LNG to survive a summer heat wave. Now, in this scramble for energy, how vulnerable do you think India is as an importer of over 85% of crude?
India, of course, is vulnerable, as are many countries that are still heavily dependent on imported energy. And perhaps India is not so vulnerable as Japan or South Korea, or indeed some of the Southeast Asian countries. They have a slightly more diversified supply source, which is great advantage right now. But I think they have to be concerned, and the takeaway from all of this, of course, is further or greater diversification, not just of supply sources, but also of energy sources, right? I think this is a clear push. It should be taken as a clear push towards renewable energy sources that are nationally produced with the green transition. Nuclear will have to be more seriously considered in this climate, and that's where I think the longer term solution lies.
Okay, okay. And also wanted to talk about the US. Now, a basket of goods, we were reading this report earlier, how something that cost about $100 in 2020, that same basket now costs about $123. Now, the data shows that 2020s are the most inflationary period since the 1980s. Do you think the common man in the US is fighting a losing battle and the global cost of living simply has reset permanently upwards?
I think the big takeaway from a lot of these shocks will be, and the lasting one will be, a rise in inequality. And we have seen that already come out of COVID, which you referenced around following the 2020 shock. And now I think this will be true of this fuel shock and also longer term megatrends, such as the technological shocks with AI and digitalization. So I think the common man, as you say, will be struggling more and more, while a smaller and smaller percentage of the population cream off a larger and larger share of the economic pie. The question now is how sustainable is this, and when will this hit the wall? When people no longer will put up with this huge gaps as they see their cost of living rise so sharply, while a handful, sometimes two handfuls of people have a bigger and bigger share of the country's GDP.
Right. Like you pointed out, the wealth gap is clearly widening and it's the common man who is struggling. So speaking of inflation, the WEF chief economist's outlook, it shows that a staggering 94% economists have a consensus that inflation will spike due to the supply shocks. And if inflation rose back, are central banks like the RBI, Fed, ECB, are they completely weaponless given that raising interest rates further could crush economic growth?
Well, that's right. I mean, this is the dilemma I think central banks are faced with, balancing between trying to keep inflation in check while not further contributing to the growth slowdown and inducing not just a recession, but stagflation, right? Where you have falling growth or demand causing lower growth and rising prices. But we must remember that the central bank's first and foremost mandate is the management of price change, right? Inflation. So they will have to prioritize monetary policy towards inflation control, but walk the tightrope in not inducing sharp growth contraction. We've seen the Philippines already raise interest rates not once but twice. Others are considering it. So this is the current dilemma that they're facing. But again, this is why we're at a critical point where we need to resolve this crisis so there's a bit more certainty about where we go from here.
Understood. So monetary policy decisions will be very key to watch in the coming months. Dr. Menon also want to talk about some of the other factors in India. Now, India has seen a severe summer heat wave and it is staring at a weak monsoon risk as well. Now, when you mix high diesel prices, which power irrigation and transport, with low crop yields, how bad could India's food inflation get, say, by the third quarter of 2026? And of course, this, we do have grain reserves and water in reservoirs. So will they be able to shield people from the adverse impact?
Well, I think the honest answer to that is we don't know right now, but it doesn't look good, right? It looks pretty dire. I think there are farmers thinking twice about the sensibility of replanting in light of all of these uncertainties and price shocks. and that could mean a huge drop in production volumes. And of course, yields are going to suffer, even if they do go ahead, because the amount of fertilizer and amount of irrigation will be reduced. So, there's going to be a big drop in food output. The World Food Program is got quite a dire scenario about the impacts on poverty globally, and that, of course, is concentrated in sub-Saharan Africa, but India, I think, is also very vulnerable with its teeming millions dependent on agriculture for livelihood, as well as this output to feed the world's most populous nation.
Okay. Dr. Menon, we have spoken about a lot of macro factors, but from a micro perspective, for the common citizens, what are the biggest costs to watch over the next 3 to 6 months?
Sorry, what are the biggest what? Sorry?
The biggest cost that they should be watching out for?
Oh, right. Okay. So I think in terms of costs, of course, everyone has their eye on gasoline prices, and this is an important expense for a lot of people, but depends on your occupation, of course. I mean, for farmers, they'll be looking at the cost of fertilizers, looking at the cost of fuel as well, diesel, and overall, I think people will be concerned about food prices. I think this is where most of the population will keep their eye on to see how food prices change. But again, these are all inputs in one way or the other. So they'll feed into the system and affect other prices as well.
Right, Dr. Menon, like you pointed out, food, fuel and fertilizer, some of the key prices to watch out for going forward. Thank you for joining me on WION with all of those insights. On that note, we'll let you go.
Thank you also.
Right. Well, the big takeaway today is sobering. The economic damage of this decade seems lasting. The key question now is whether policymakers can contain the impact before it reaches household budgets and slows economic growth. Keep watching WION for the economic realities that matter to you. I'm Kanishka Sarkar. Thank you for watching.